Not doing more than average is what keeps the average down. William M. Winans. And William is so right about being average. Folks, the average person doesn't spend any time looking at these markets. The average person probably tries to find some type of trick. Well, there's no trick. There's simply the work it takes to learn how to read these stock charts, how to recognize weekly vertical crossovers, which are pretty easy. But then knowing when to get out, when to stay in. That is the real magic once you've understood weekly vertical crossovers, 2-day recrosses. Let's jump into these charts. We see stocks are up for the day. Bonds are up. Gold is down. Let's see how we ended the week and what things might look like this next week. What do we see when we look at stocks? Okay, let's analyze. Think along with me as we look at what we are seeing. We had 2 prior weeks of up movement, pretty strong prior to this week. We look at where we reached the high the prior week, 287.30. What was the high this week? 286.79. So we can automatically see a slowing in the up movement. Derivative oscillator still losing downward momentum. That is because of the 2 prior weeks, and this week being a week where things did not go down. We didn't hit a higher high, and look at the candle itself. It's barely above where the prior week's candle closed, still didn't reach a higher high. Price percent oscillator heading up, but still negative. So the overall mood of the market, still negative. We still haven't captured just the down movement in that week ending the 20th of March. Remember, we had 3 down weeks prior to that. So things are slowing. Is the bull trap being set? Possibly, very possibly. Look at how when we look at the 2-day chart. Now again, the latest 2-day candle has, we saw the Thursday ended the prior candle. Friday is the first day of this latest 2-day candle. So what do we see happening? Again, we see where the market topped back on the 17th on the 2-day candle. That was last Thursday and Friday. And then we've seen a sideways slide since then. We do see some green candles at the end, but again, not reaching as high as things had back on the 17th. Not even as high as things had been earlier in the week as we ended the week. Derivative oscillator consequently is losing momentum. Now that price percent oscillator, all important, is still heading up. Still heading up on the weekly and the 2-day. The weekly is down, the 2-day is up. So we will pay close attention to that. We will also try to redraw our trend line. Can we do, it's hard to do one that's decent in any way, but the closer in time we can make the trend line, the better. We love to have 3 candles, always have to have a minimum of 2, but we like to have 3 candles connecting where it gives us anything that we feel comfortable relying on. So we're going to move from the 2-day to the 4-hour. We go to the 4-hour chart and we're still negative on that 4-hour chart. Is that not fascinating? It rotated over with the big down move on Tuesday. Then things sort of tracked up, sideways and up since then, really sideways since Thursday afternoon, Thursday and Friday. But again, up a little bit we saw on starting off on Wednesday, going into Thursday morning, and then down a little bit and sideways since then. Price percent oscillator still negative on the 4-hour chart. Derivative oscillator losing downward momentum. So where does this leave us at the end of the week? It leaves us at the possibility, unless things just boom this next week, to more sideways sliding action. This is what I think is most likely with what we're seeing right now. And remember, we're making our decisions about the future based on what's happened in the past. That is why this is always fascinating, because we can't use the past to totally accurately predict the future, but it can help us a great deal. And of course, when we have weekly vertical crossovers, the momentum of the movement down or up is what we are counting on. Well, here, the momentum is a sideways slide. So what does that mean? It could just be gaining some energy to pop up again. But we all know what's happened with the coronavirus, with the shutdowns that still aren't ending, and with what that has done to the economy, hollowing things out. So at some point, we of course expect the bull trap to be sprung, maybe have a sideways sliding market this next week, maybe rolling over, going down. Either way, hell, if we end the week with a weekly vertical crossover going up, guess what we're going to be ready to do? We'll be ready to look at some more up movement. If we don't, then we won't. It's just that simple. We follow the charts. Like we said, S&P 500 up 1.37%, NASDAQ 100 up a little more, 1.58%. What do we see going on there? Well, as we look at the candles, we can again see we haven't reached a higher high. We're getting closer to moving up, to having a crossover on the price percent oscillator. Derivative oscillator still losing downward momentum. Go to the 2-day chart, and what we see there again is more of the sideways slide, still not hitting a higher high, 214.30 and 216. So yeah, we go back to the 17th. Still haven't hit a higher high on the first day of this latest 2-day candle. Can we redraw a trend line that gives us any semblance of assistance? It's hard. It's hard to get much of anything right now, which again is showing you things are sliding sideways. That's why that's difficult to get a read. So guess what happens when you can't get a read on things? You don't act. We act when the charts tell us to act. Just like the S&P, NASDAQ 100 is still down on that 4-hour chart, losing downward momentum. On the derivative oscillator, flat. On the price percent oscillator, we can see the sideways slide over the last 2 days. So we'll continue to watch, see how this next week shapes up, if the bull trap's getting ready to spring, or if there's going to be, for any number of reasons, the market being excited about continuing to go up. And if it does that, then what will we do? We'll be ready for a weekly vertical crossover at the end of next week if that occurs, and we'll look for a position jumping up, remembering all the time that there is going to be a price to pay for what we have done to our economy, or what the coronavirus has done to our economy. That's where we are in stocks at the end of the week. We're going to head on now to bonds. Let's go to bonds, up 0.23%, just a little bit. How did we end the week? Well, bonds hit a higher high than they have over the last few weeks. Of course, not approaching yet the 179.70 of the week ending the 13th of March, but we were up for the week. Bigger candle than the prior week, higher high than the past few weeks, even back to the latest high week. Let's see, that was 170.33 back on the week ending the 3rd of April, 172. So yes, getting higher. Derivative oscillator still losing momentum. Price percent oscillator still edging up on that weekly chart. So we have confirmed up movements there. Go to the 2-day. Did not end the week with a crossover, and again, it wouldn't have counted anyway because the candle has to be drawn. This is just the first day of the latest one. It is an up candle that's forming. Again, when that crossover, if indeed it occurs going up, we'll be ready for it. Look for that potentially this next week. Mark that on your notes to be looking for the potential of a 2-day recross going up. If that occurs, derivative oscillator is already positive. You'll want to jump in and do a practice trade on bonds, most likely. Go to the 4-hour chart. What do we see there? It can't cross over either. We saw some down movement in the morning, a recovery in the afternoon, like we said, up just a little bit, less than 0.25%, but that's where we are on 20-year bonds. Remember, you're going to be looking for a 2-day recross over the course of this next week. If that occurs, then we'll be ready. So that's where we are as far as stocks and bonds go. I hope you've been taking notes. Are you using your weekly market worksheet? They're available for free in your show notes. I hope you're using them. Now, we're going to lastly go to gold. What's going on with gold? We see that gold ended the week up, not reaching a higher high than the prior week. Price percent oscillators weakened a little bit. Derivative oscillator peaked all the way back on when gold hit its highest high at 164.42. We ended this week with 163.31, not too far off, but gold, since it's peaked then, it is oscillating downward on the derivative oscillator. So we'll continue to watch. Was an up week. Now, what about the 2? Do you know what I did, folks? I opened up the 2-day for you instead of the weekly. Okay. Same thing though, same thing. The weekly is up also. And again, didn't reach a higher high. I just had a feeling there seemed to be too many candles there. There were, but it was doing the same thing. We're just seeing it more in a macro versus micro. What we see here is, again, not reaching a higher high, still moving up. Derivative oscillator losing devolution. It's losing downward momentum. Price percent oscillator is going up quite nicely now. The 2-day, which follows along with that, we're seeing the devolution from the peak, and we are seeing, again, not reaching a higher high. We're seeing the price percent oscillator losing momentum. We don't see that, just to compare. On the weekly, it's actually gained it. It's using part of the recovery from the prior week. Remember, this encompasses 5 days instead of 2 days. So the stretch you have is not compacted in there. So again, that's where we are. Sorry about that little mistake. And again, it pays to keep paying attention to your time frames and doing it the way I did it. Start with the weekly, go to the 2-day, go to the 4-hour. If you do it in that order every time, you'll catch a mistake like I made, and it won't cause you to pull the trigger on something bad. So what have we been looking for in gold? We've said it over and over and over again. We've been looking for a 4-hour crossover going up. And it didn't happen. Gold down 0.43% for the day, even though the derivative oscillator is gaining upward momentum. Check it out. Not enough energy to cross over going up on the 2-day chart. We had a doji in the morning, a spinning top in the afternoon, indecision tending down. Hopefully, gold might rocket this next week. We see that 4-hour chart crossover going up. It would be worth your time to seriously consider pulling the trigger on an up move in gold. If there's enough momentum to do that, perhaps you can do a practice trade in gold. I love gold. Gold has been my number one money maker here for my practice trades over the last many months, as it has, again, it's done a number of nice things for me. When it crossed over going up back in early January, that was beautiful. It also crossed over going up, in January, crossed over going down, which of course sets you up for a put trade back in October. Crossed over going down again, if you guys recall, on the 13th, went down that next week. That was the Friday the 13th of March. Nice down play that following week, and then crossed back over going up for a nice play back on the 9th. And it was beautiful for that following week. Lost some of that edge, so we would like to see that 4-hour chart cross back over going up. Folks, that's where we are as we end the week. We've got a special training for you called the Monday effect or the weekend effect. I have that in your training today. I think you'll get a kick out of it. At the end of this video, we will have a repeat of the video for you. It'll be there on the screen at the end of the video today on Corona Investing, teaching you all about what a bull trap is and what we are in, I believe, right now, and always going to be preparing for that possibility. So that's where we are for all of you who just care about those 4 ETFs. For the rest of you who really like the coverage we do of oil, Bitcoin, and real estate, we're going to those next. For those of you signing off, God bless. Have a great weekend. If you hadn't purchased our book, we still have copies, signed, autographed copies available for you. Follow the link in the show notes. If you want to get that the special trainings we put out every day that I just talked about, you have to be signed up as a member. You go to chartingwealth.com, sign up for free. We'll get them to you. Remember, the trade worksheet, daily market worksheet, weekly worksheets are for free for everyone in the show notes, whether it's at the YouTube channel, at the website, wherever you might be. If you're listening on iTunes, look in the notes there. You'll find them also. They're PDFs. You can print them out, fill them out, everything you need. And thank you. Just had new Patreon sign up over the last day or so. We appreciate your support. $30 a month. Thank you. $1 a day really helps us with the expenses here at the channel. As you know, we do all this for free for you. Let's move into oil. What do we see going on in oil? Oil flat for the day on Friday. Just dead. What do we see happening? Oil continuing to hammer down. Hammer down. had a bad week. One day this week, we'll see it in just a minute, we had oil down 50%. And it had already dropped from a high somewhere before all this started of $13 down to a low point of $1.85. Would you like to have been holding on to oil at 13 and watched it go down to $1.85? I don't think so. Bad. So what do we see? Derivative oscillator losing downward momentum. Actually peaked. And the reason that it's lost some of that downward momentum, where there were 2 days of a sideways slide, a little slowdown in the down movement, that's oscillated the derivative oscillator up. Hasn't affected the price percent oscillator, still hammering down. Big red down candle for the week. We go to the 2-day chart. You can see again where things were down. The latest candle, first day of this latest candle drawing. Green, solid green candle means a slow down in the down movement. I mean, how could you hammer down much worse than we saw on that candle for the 21st? Again, tough week for oil. We go and we see the price percent oscillator, derivative oscillator continuing to lose upward momentum. Go to the 4-hour chart. And of course, we can just see nothing happening on Friday. We saw where things bottomed out. We saw the huge kicker down day on Tuesday. Down in the morning, down further in the afternoon. Huge hammer loss. Then sort of a sideways slide is what we have going at this point. So oil just having a hard time recovering. Hell, everybody's locked indoors around the world. Business is not doing business. And oil freighters are roaming the seas full of oil and nowhere to put it. So very tough on oil. At some point, sure, it will recover. Again, I think as I told you guys, I've got me a buy point at $1.52 and at $1. I said, why not? Don't know if it'll ever hit that low, but I thought at that point, I'll buy a few hundred shares and just see how it goes. Now, that's me. That is no trading advice at all. That is a practice trade you can do. We're not a stock calling service and education firm. I'll tell you occasionally what I'm thinking and what I'm doing, but that is not advice to you. Now, let's talk about where we are on Bitcoin. Down for the day, 1.01%, and we never start with a 4-hour chart, do we? We start with the weekly. We saw that the weekly did hit a little bit higher high than it has lately. It's still not recovered anywhere near the drop it sustained just on the week ending the 20th of March. We do see the price percent oscillator heading up a little bit. Derivative oscillator still negative, losing downward momentum. We go to the 2-day chart. It crossed over going up back on the 15th, and it is continuing to move up some. Again, Bitcoin was down for the day, but remember, Heikin Ashi candlestick shows average pace. That's what we're seeing as far as price movement. Derivative oscillator gaining momentum. Like we said, price percent oscillator heading up. 4-hour chart. Saw some up movement in the morning and pairing off in the afternoon on the Heikin Ashi candlesticks. So what are we really waiting for here on Bitcoin? Trying to see if and when, well, at some point one would guess that the price percent oscillator would cross over going up. When that happens, that would give us a good signal, as it did previously, that Bitcoin was going to go up for a while. Now again, don't get into this mood that you go from crossover to crossover. No, of course you don't. You'll end up many times losing everything that you gained. You don't wait that long. That's why we use trend lines. That's why we use the 2-day chart with 2-day crosses in the opposite direction, or the 4-hour chart in conjunction with the 2-day, in conjunction with trend lines. Folks, that's what we're all about here. That's why you're here 10 to 15 minutes a day training. So we'll be watching to see sort of where Bitcoin goes. And if we do have a crossover going up on Bitcoin that signals, you might want to purchase a practice trade contract in Bitcoin and just see how well you can trade it practice-wise, not risking any money. Now, let's go to Vanguard, Real Estate Investment Trust Exchange-Traded Fund. We talked about how much property lost from February at about $99.72 is the high, down to a low of $55.58. Thing I love about it, when stocks or ETFs are around the $100 range and you're comparing, basically lost 45%. Boom. Pretty bad. What's it recovered to? Recovered to 73, so it's about recovered, up. It's lost 26% at this point. I mean, still, real estate has gotten hammered. Where is it going? Well, we look at the price percent oscillator. It shows us it's bending over, going down. Derivative oscillators losing downward momentum thanks to some weeks of some up movement, really 2 weeks there. But this week, a weak week. We go to the 2-day chart. What do we see there? We see the sideways slide devolving down as far as the price action goes in our Heikin-Ashi candlesticks and our derivative oscillator. Price percent oscillator still heading up somewhat. Go to the 4-hour chart. What do we see there? Again, we can see even more the sideways devolving down movement. So what are we looking for? Well, we already have the 2-day in a confirmed up move. We're going to see if indeed the weekly crosses over going up. If it does, of course, that would show us that real estate is at least going to sustain a week or more of some strong up movement. Typically, that's not happening. Still moving down. So we'll wait and see how. I mean, what do you think is going to happen in real estate, folks? What do you really think is going to happen in real estate over the next many months? I mean, what's this showing us? Commercial property may have lost 27% of its value. It had been down 45% of its value. So again, we will watch. We will see what the market shows us. And we will let these charts lead us, because the charts, the price is the only thing you hear about the markets that's true. Everything else is conjecture. Price is the only thing that counts. That's why we follow price movement. That's why we don't care what they say on the news. That's why we don't pay attention to the news. We can sure use that in an equation, but remember, price action is always what leads you to your decision making. That's where we are as we end the week. Thanks so much for being with us. God bless you, my friends. All the best from the whole team at Charting Wealth World Headquarters.